Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 5th, 2025, and we're diving into ABM's fiscal third quarter earnings report. ABM, a leader in facility, engineering, and infrastructure solutions, has just released its latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss ABM's performance and outlook with you.
Revenue and profitability overview. Let's start with the top line. ABM reported a revenue increase of 6.2% to $2.2 billion, with organic growth contributing 5.0%. John, what does this tell us about ABM's market position?
This revenue growth is a strong indicator of ABM's robust market position. The company has effectively leveraged its diverse service offerings across various sectors, including technical solutions and aviation, which saw significant revenue increases of 19% and 9% respectively. This growth is a testament to ABM's strategic acquisitions and its ability to capitalize on higher microgrid volumes and healthy air travel markets.
And what about profitability?
ABM's net income rose to $41.8 million, or 67 cents per diluted share, a significant improvement from the previous year's $4.7 million. The adjusted EPS came in at 0.82 cents, slightly below last year's 84s, primarily due to higher interest and tax expenses. However, the company's operational efficiencies and cost management have helped maintain a stable adjusted EBITDA margin of 5.9%.
Cash flow and shareholder returns. ABM has shown impressive cash flow improvements this quarter. Can you elaborate on this, John?
Absolutely. ABM's operating cash flow surged by 120.1% to $175 million, and free cash flow increased by 134.3% to $150.2 million. This is largely due to enhanced cash collection efforts amid their ERP conversion. The company is also rewarding shareholders with a $150 million increase in share repurchase authorization and a quarterly dividend of $2.65 per share, marking their 238th consecutive quarterly cash dividend.
Strategic initiatives and future outlook. John, ABM has secured over $1.5 billion in new bookings and is implementing a restructuring program. How do these initiatives position the company for the future?
ABM's new bookings represent a 15% increase year over year, which is a strong indicator of future revenue growth. The restructuring program, expected to deliver $35 million in annualized cost savings, will enhance operational efficiency and align the company's cost structure with its strategic growth objectives. Additionally, ABM's investments in AI capabilities and client-facing resources are designed to drive higher growth and improved margins over time.
And what can we expect for the rest of the fiscal year?
For the full fiscal year, ABM expects adjusted EPS to be toward the low end of their $3.65 to $3.80 range, reflecting higher interest expenses and margin dynamics. However, the company anticipates meaningful improvements in adjusted EPS and margin results in the fourth quarter, driven by the benefits of their restructuring actions and strong performance in the ATS segment.
EPS forecast and market reaction. Analysts had forecasted an EPS of 95 cents, but ABM reported an adjusted EPS of 82. How has the market reacted to this, John?
The market reaction has been mixed. While the adjusted EPS fell short of the forecasted 95 cents, the company's strong revenue growth and cash flow improvements have provided some reassurance to investors. However, the shortfall in EPS might lead to some volatility in the share price as investors digest the implications of higher interest and tax expenses on future earnings.